It could, but I think we're just maybe looking into it and realizing that on the good note, you have the retail sales numbers very solid. The consumer is in the game, and it's taken a long time for that to happen, but basically holding up the market. I mean, the fact is gasoline prices are finally filtering through as the economic virtue that they are, and consumers are spending more. On the other side, it seems like the market's not as concerned, clearly not as concerned about industrial production or Empire Survey today, realizing that autos clearly have throttled back production just a little bit. Inventories are up, and it's going to take a while to work its way through the system.
So I guess that domestic economic data more than justifies liftoff. I guess that's a general consensus, but the market does expect the Fed to hold off on raising those rates. Do you think the recent global financial turmoil will be enough to keep the Fed on hold for another few months?
I do. And your first statement was absolutely true from my perspective, that the economics are there. They could raise rates. They perhaps should raise rates, but I think they're going to wait until December, given the severe problems that we're seeing in the emerging markets, commodity prices being down so much, hurting them, capital outflows, and also emerging market debt, something we don't talk about. So I think it's going to be a great time for the FOMC to start hinting at rates being raised by a quarter point by December. I don't see it happening on Thursday.
It's Gaurav Soda here. Look, there's a very clear mandate for the Fed. They look at employment, they're charged to look at employment and charged to look at inflation. Why is it the case that international matters should pollute that mandate? And why does the Fed care all about volatility in international markets?
Oh, I love that question. And, I should be asking that because you're right. I mean, their mandate is about inflation data, about employment data. I think it might be a little bit of a disguise to wait just a little bit longer to see if the data does, justify raising Fed funds. I mean, as you know, we're just awash with cash here right now. So to raise rates, we saw that what happened in Japan 2 times when they did that. It didn't end very well. In history back in the Depression era, we did that as well prematurely. So I think the Fed might be using it as a disguise, but also realizing that the capital outflow issue is something they really need to hone in on.
Well, we speak about that inflation there, Larry, and we actually have inflation data due out tomorrow, which we know obviously is very important, if not the most important data point for the Fed. Do you think this is likely to have any impact on their decision this week, or would all of those voting members have already made up their minds?
Yeah, I think they've already made up their mind. And I think irrespective of what the inflation data is tomorrow, I think if the number's bad, they'll just, brush it off to being one-off, given the recent decline in oil prices and food prices. I think it's a temporary thing. But, yeah, I don't think it's going to affect them. In fact, I think their decision is made right now.
Look, the US dollar is the other thing that I wanted to ask you about. It's been rising and rising, perhaps on the expectation that that rates will also increase. If the Fed doesn't move this week, is the likelihood of that US dollar staying where it is? What's going to happen with the currency, do you think?
Yeah, I think it's rallying for different reasons, and obviously what it rallied before. Not to change the subject, but when you look at the 2-year yield, it went up 8 basis points today. It's a tremendous move, so that's going to cause the dollar to rally as well. You think of the outflows coming out of Saudi Arabia, just to mention another country, on the back of the biggest outflow they've ever had back in February and March. That also is going to affect the dollar. So I think the U.S. dollar does have a valuation problem. But I definitely can see it rallying a little bit more, but not a lot more from here.
Larry, what do you think would be the ideal policy outcome for equities?
I think the best outcome would be to hint that we're raising rates in December, that they're going to keep zero interest rate policy in place, to explain very, very well that it's going to be very data dependent. But also, I think the big pink elephant in the room is a long-term projection, or the dots, of 3 3/4. I mean, I think that needs to get a haircut back to reality, perhaps by 50 basis points, because I just can't see that happening. I don't think the market thinks that's going to happen at all. And so the Fed just needs to get on board. That'd be a very dovish signal, and realizing that longer or medium or longer term rates are going to stay low for a long time.
If we were to see the Fed lifting off, do you think that would be a positive catalyst for equities? I mean, would we potentially see that S&P 500 moving out of that tightly held trading range?
Oh, it's so confusing to answer, because I think it depends on what comes out underneath the message. But I do think there's so many people on the sidelines just waiting for just to get this over with one way or the other. So I think it could be a short-term catalyst or boost to risk assets.